Welcome to Fear and Greed, the week ahead. This is where we take a look at the big events, reports and releases coming up this week that give insight into the economy and a look back at what happened last week too. I'm Aylmer, and every Monday I'm joined, of course, for the week ahead by economist Stephen Koukoulas. You'll find him at thekouk.com, TheKouk.com, and on Twitter using the handle thekouk. Stephen, good morning.
Good morning, Sean.
Now, before we get into the big announcements this week, let's have a little look at last week. The Reserve Bank board meeting, did they do what you expected them to do?
Pretty much so. The policy changes were, as expected, a tiny wind back in their bond buying program. They didn't extend their yield curve control, so they're not buying the November 2024 bond, and they kept the cash rate unchanged. But there was a really interesting series of comments from the governor, who also gave one of those rare press conferences after the board meeting. But the key points of that were that he's still not yet convinced that this better economic news that we're seeing will translate to a quick lift in inflation and wages. So he reiterated his view that the official cash rate, the 0.1% rate, will be in place through to 2024. The other thing that he mentioned in the Q&A and a subsequent speech was a linkage between immigration and wages, that the fact that we've got our borders closed and that a worker visa scheme is effectively not working means that businesses are having to pay up local Australians to get the skills that they need. And of course, they're paying higher wages rather than relying on immigration, I suppose. And that's a really interesting thing that sort of made him have a second thoughts about whether we're actually going to see some wage pressures coming through because of the closed borders.
Was there a sense of loosening monetary policy or not?
Look, at the margin, the bond buying program was scaled back from $5 billion per week to $4 billion per week. So, look, it's a little bit less aggressive, but in fact, interestingly, that's in line with a smaller issuance from the government because the budget deficit's going to be smaller this year than last year. So, as a proportion of the bonds on issue, it's about the same ratio. Right. But again, he acknowledged the better news. There's no doubt about that. You know, he's pleased to see the labour market improving, but as I just mentioned, he's not yet convinced that we're going to be getting that inflation and wage pickup that he wants to see.
Okay, now there is a bunch of other news out last week, the retail sales, building approvals, ANZ job ads. What's the take from all those?
Yeah, generally good. The retail sales were revised up, so 0.4% growth in the month of May. So that's a pretty solid level of spending growth. We saw building approvals dip. There's no surprises there because we had a big bring forward of construction activity for the residential area because of these government schemes. And so we had a big lift in late 2020, early 2021, and that's just tapering off, and there's nothing terribly worrying about that. And ANZ job ads, wow, you know, there's still hot demand for labour out there, that the firms are looking to, ramp up their labour force. They're putting lots of job ads into the internet space, and it suggests to me that the employment side of the economy is going to continue to do pretty well.
Well, that's last week. We'll be back in a moment and get into the week ahead. I'm with economist Stephen Koukoulas, aka The Kouk. So, Stephen, the big one this week, of course, is labour force. You talked about job ads a moment ago. What do you expect this? Well, it's the June month.
Yeah, for the month of June, look, this has got a couple of quirks in it, and this is not a cop-out for saying that it could be any sort of...
No, Kouk, I'm interrupting you here. Why are there always bits of cop-outs among economists? What's the deal there?
Well, a couple of things. We had the lockdown in Victoria, the 2-week lockdown in Victoria, which will impact the reading. And how big an effect is that? Is it 10,000, 20,000 jobs? I'm not sure. And last month we had the plus 115,000. And very rarely do you get that sort of increase in employment and then another plus. So we could well see just a small negative, minus 10 or 20,000. And look, that would not be a sign of weakness because just the trend numbers and that choppiness in the month-to-month series suggests that the trend is still pretty good. But all eyes will actually be on the unemployment rate and the underemployment rate. Yeah, that's down at 5.1%. And if we sort of can, through a bit of good luck or change in the participation rate, get that towards 5%, then I think that there'll be just further confirmation that the improvement in the labour market is very real. And the question will be, can we get below 5% by the end of this year?
So where do you think we'll be by the end of this year and then into next year?
Well, as we were just saying about the job ads series, the demand for labour is still hot. The economy is still doing really well. And notwithstanding some of the choppiness in the stock market at the end of last week, Yes, the share price market's still pretty strong. Housing prices are still going up. So there's still a powerful wealth effect out there. And as we just said, the RBA is keeping interest rates stunningly low to help both householders and the business sector. Don't forget, the Aussie dollar's under downward pressure as we're speaking. So there's a lot of things that are supporting the scenario for stronger growth, and stronger growth means more demand for labour. So that's my long way of saying I reckon we're going to be around about 4.5% for the unemployment rate at the end of the year.
Wow, pretty good. Now, you mentioned household and businesses just then. This week, you've got National Australia Bank Survey of Business Confidence and then the Westpac Consumer Sentiment Survey, both pretty handy releases.
Oh, look, I love the NAB survey of business confidence and business conditions because it's a right up-to-date survey. So this will be for the month of June. And, for example, we don't get the June quarter GDP till September. So it's a really contemporary indicator of what businesses are thinking and what they're thinking about a whole range of issues. It's not just, do you think your business is doing well or poorly? That's important. But they do also ask questions about, are you expecting to increase your capital expenditure, your hiring intentions, price and wage pressures? So there's a whole lot of subsets within that. So obviously, this is going to be impacted partly by the New South Wales lockdown that we're seeing, the Victoria lockdown, and a few other, what we might term temporary issues. So it'll be curious just to see if the business sector tapers back some of its optimism. But having said that, the last few months have been very, very robust, and that'd be nice to see continued. Consumer sentiment, well, it's choppy from month to month. It got a bit of a hit last month from the Victoria lockdown. Obviously, we've got the Sydney and New South Wales lockdowns now. That'll likely have a negative impact. So the consumer sentiment might be more influenced by COVID-19 than the real economy.
Yeah. And just before you go, I mean, we follow the US, or global financial markets follow the US. And about 3 or 4 weeks ago, the Fed Reserve governors came out and indicated that maybe they're interested in lifting rates a little bit earlier than thought. So the June inflation data is out this week as well. And Jerome Powell, the chair of the Fed, is speaking.
Yes, look, the US stuff is really important. And that inflation side of issues and Fed policy has been the focus of attention. But having said that, just in the last couple of weeks, there's been a lot of doubt thrown on that hawkishness, if we can call it, from the Fed officials. Yeah, the bond markets rallied, incredibly in the US, and that sort of spilt over into here. So, that reflation trade, that these easy monetary conditions around the world, the massive fiscal stimulus might not be getting the traction that we'd like to see. So what happens on the inflation data, and of course what Powell says, will be very important. It influences not just the US markets, but ours here.
Stephen, have a great week.
Thanks, Sean.
That was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on Twitter using the handle TheKouk. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.